the media narrative on this tax information has been, well, basically the legislators cut taxes for wealthy people. Not so.
Yeah, and beyond that, cut taxes for wealthy people on the backs of lower income people. But of course, this study, which was done for us by the Beacon Hill Institute at Suffolk University in Boston, shows that the recent tax reforms in 2013 will reduce taxes for all income groups starting at below $25,000 a year, households below $25,000 a year, all the way on up. All of those households will be paying lower taxes as a result of the 2013 tax reform. And if we include in that, what I would argue, all the tax declines that can be attributed to actions taken by the Republican legislature starting in 2011, that expands even further. And in fact, it ends up being, if you look at the 2011 reforms or the 2011 changes to the sales tax, it becomes overwhelmingly favorable to low-income taxpayers because they really got the benefit of that decline from 5.75% sales tax to a 4.75% sales tax.
And yet, Roy, there have been some progressive advocates who continue to criticize, in fact, have reacted to the Beacon Hill report and your analysis of it, saying that, well, you haven't factored in everything, and so that's not really true.
Well, they're lying. They're lying. The fact is, and I'm sure they haven't looked at the study, or if they had, then it's particularly egregious. We include the sales tax expansion in this study to things like movies, and we include the elimination of the earned income tax credit in this study. And despite those changes, which can be considered tax increases in this reform, overall, because of the decline in the income tax rate, and especially for the dramatic increase in the standard deduction, all households in lower income groups are going to benefit from this.